Hey YouTube, Ken here from Think Trade Profit. In this video, I want to talk about counter trend trading. I'm going to give you a framework that'll help you build some strategies, whether you're a swing trader or a short-term trader, that you can add to your toolbox to help you make profits in different types of markets or at different times of day. So with that, let's jump right in.
All right, so jumping into counter trend trading, how does this differ from other types of trading? Just a quick refresher, stay with me here, guys. But basically, this is not breakouts, this is not trend following, no gap and go and that kind of thing. We're actually trying to find the point where price is going to turn. And it doesn't mean we're picking tops and bottoms, but it means using what we know already historically to find a high probability area where price is going to make it, there's going to be a change in sentiment. That's counter trend trading. And there's a couple ways to go about it. Um, some characteristics of counter trend trading, generally they're shorter in duration. Trend following, sometimes you have to wait a very long time or stay in your trades a long time, or you take a lot of small losses before you catch a long trend. Gap and goes and that kind of thing, you may hold them all day. Counter trend trading is generally shorter in duration, and you have a higher percentage of winning trades. Um, 55%, even as high as 70%, even higher than that sometimes. But somewhere right in the middle is around 60, 65%. And depending on what instruments you're trading or what stocks you're trading and what time frames you're trading, you can kind of finesse it a little bit to work with what would be optimal for you. Generally, they have a smaller winning to losing trade return. What is that about? It means the risk reward. So a lot of breakout traders and that kind of thing, they say, oh, you have to take at least 2 to 1 or 3 to 1. That way, if you win only 50% of the time, you're still doing really well and that kind of thing. With counter trend trading, I think it's better to have a more even risk reward ratio. That's the way I've been doing it on the very short term time frames. I get a lot of trades. I have a high win percentage. Um, and the losers and the winners, they're pretty much even. So once I hit a string of successful trades, I'm kind of sitting pretty for the day, and I just that works for me. I think there's an opportunity to milk a little bit more out of the profits. There's a lot of times you do catch the turning point, a major turning point for the day, and price can then trend. But for me, this really started with me experimenting on the 1 minute time frame with kind of large cap stocks and the tech stocks, and I decided to go with a 1 to 1, and it's working for me so far. Um, there's a couple ways to figure out your entry points. There's overbought and oversold levels, so you could use an indicator. That's not the way I do it. When stocks trend, especially some of the stronger favorites, they go for a long time. So I haven't had too much luck with overbought and oversold indicators or Bollinger Bands or something like that. Um, Another way to do it is buy and sell at inflection points, and that's kind of my approach. I'm going to tell you how I discover those. And then there's just a general range or the noise of the market. I do this too. Outside of this counter trend approach that I'm going to share with you today, I do a lot of discretionary trading. Um, with areas of recent resistance or recent support, and I also play a lot around round numbers like the zero zeros, right, or the 50 levels. Those are kind of big areas, and what you'll do is you'll see stops run, and they go up above a new say 214.08, and then it drops back to 00, and then it drops back below and stuff. So they're kind of magnets. Um, so there's a couple ways to find entries, but I'm going to talk about inflection points where I try to pick places that price has turned before, and I may slip up and I may start calling those support and resistance, or I may call them local highs, or I may call them pivots. They're not pivot points in the ways of computing them of days of old and that kind of thing. In my mind, a pivot is where price just made a change. You know, it went down, it hit a point, and then it started going up. But I do kind of use the lingo and I'll say, oh, this is a local support and resistance because it's this inflection point where price turned. So bear with me throughout the video. If you hear me say that, I know some of these are not well formed support and resistance levels. They're not. They're one spot on a chart when we find something that happened before. So the counter trend trade setup, I'm going to show you how to get these entries, but basically we're going to find areas, we're going to use candlestick charts, we're going to look at them historically, and we're going to find either a low or a high. Let's take a look at this chart of Cheesecake Factory. And we're going to use this to find inflection points. And this is the way I'm going to do it for the purpose of this video. And we're going to use the same methodology for swing trades as we do for short-term trades. And this is a very simple approach. It's easy to find these, and then you can record them and start doing your own backtesting. One thing I'll note, um, don't believe anything you hear on the internet. Don't take my word for it. Take what I give you here today and backtest it against the stocks that you like to trade. What I found for this methodology is it seems to be a little bit higher price stocks behave better, stocks that move in points, maybe above $50 a share, and trade at least 1 million or 2 million shares a day. So that may kind of exclude some of you depending on your account size and that kind of thing. You may not have the account size to trade a $50 or $100 stock, and I totally understand. Um, but work through these inflection points because maybe there's other options for you. Maybe there's an options play you can do off these inflection points, or you could take small positions with a margin account on the swing trades and that kind of thing. But stick with me. Don't be discouraged. We're going to take a look at how to find an inflection point and the basic methodology for what I'm going to share with you today. So this is a chart of Cheesecake Factory, and this is the daily chart, and this goes back almost a year. So we're looking for local highs and local lows. The requirement for any of these levels, I just call them levels, and I record them. I'll say, oh, is this a recorded level? Is it has to have 4 candlesticks, say on one side, that are lower than the high. So let's use this candlestick here. This is Active Trader Pro, so the the specifics of each candlestick are kind of highlighted up here in the corner. But let's take this one. This looks like a local high, and it actually has a high of 43 even. So to the right of it, there's 1, 2, 3, 4. So there's definitely 4 candles that are all lower, and they don't have to each be sequentially lower or anything like that. It's just 4 candles lower. None of these breach the high that this candle put in. And likewise on the left-hand side, these are obviously lower. So this would be an inflection point. Price turned at this point. It went up and then it turned down. And this would be a local level that we would record. So we would record 43 as a high, be an inflection point. This would be for a short. One thing to note with all of these that I'm sharing with you when I talk about support and resistance or inflection point, any of these levels that you record, you don't treat them um, as support or resistance. For example, if cake for some reason, instead of trading down, it traded much higher, and it got above this inflection point that we recorded, if it came back down to that level, you wouldn't treat that as support. This is only a resistance level because it was a high. I backtested that. I played around with it a little bit, and these points are only good in one direction. This is a resistance level. It'll never be support unless it actually puts in a support level above here where it'll trade down and then bounce up. Likewise, the lower levels, the local lows, they'll never be resistance. If for some reason price trended much lower, you wouldn't, for example, on this side. So you've got this area, there's some local low in here. You would never treat this as resistance at some point in the future if price decided to trade back up. And you could say, oh, well, I'm going to bounce off it because support may have now become resistance. Don't do that. So anyways, by inspection, it's pretty easy to see the areas where you just need to count some candles and make sure nothing breached a higher high. So here's a local high over here. This has 1, 2, 3, 4. This candle didn't breach this one. So one of these two is a high, and then these are all lower. So these are levels. So this is cake and this is a daily. So from a swing trading perspective, the entry is a revisit to one of these local highs. So that's how you determine them, and then it's just a matter of waiting for price to come back and taking a trade off of one of those levels. Likewise on the low side, you do the same thing. So I do have some rules about what you can take and what you can't take. Let's take a look at those now. Okay, these are the counter trend trade setup kind of specifics. So we talked about finding this local low or local high with at least four candlesticks on each side that are lower or higher respectively if we're shorting or going long. For swing trades, we're going to have a hard stop loss of 1.5 ATR. So it's a 14 period average true range. I'll bounce back to the chart in a second. We'll take a look at that and see kind of how that computes. And the profit target's going to be equal to that. So we set an even risk reward ratio. I also included time stop loss here, and I do this both on the swing trades and the short-term time frames, the scalping trades. 5 bars max if there was never a favorable excursion. So what am I talking about there? I don't know if you've heard the terms maximum adverse excursion and maximum favorable excursion, and it's kind of a trade stat. So you have a trade and you're in it. Um, how far did it go against you, and then how far did it go in your favor um, while you're in the trade? And that's really helpful data because it shows whether or not you're holding your losers too long, you're letting them go too far against you for too little profits and that kind of thing. So when I say favorable excursion, you get in a swing trade, and by the fifth day, if there was never any real penetration into a better price than where you entered, you really need to just get out. That's what I found. Again, we're finding the price where we're trying to find that point where price turns, and we want everyone else to be on that bandwagon too because it'll happen really quickly and you'll be able to cash out. So if it doesn't happen in 5 bars, or you don't get favorable excursion, at least it doesn't come in your favor some significant amount, at least uh, you know, a third or a quarter of the 1.5 ATR value. If it really didn't ever move in your favor, go ahead and get out at 5 bars. So that would be 5 days out. All the trades have the hard stop loss, and you put those in your system, in your trading platform when you after the entry. So that's always there to protect you. And you have the profit target, so that'll catch any quick moves in your favor if it hits that limit. But the time stop, the first 5 days is where you want to not monitor the trade, but keep an eye on it. If you don't get that favorable excursion, if it never is really in the money for any significant amount of time, then you should probably get out on the fifth day. And then I have a 7 bars hard time stop, and that means in 7 days, no matter where you're at, just get out. So let's talk through a couple trades. I'm going to pull up a different stock. Let's take a look at Intuit, and let's say that we're back in November of last year and we're watching this kind of in real time, day by day. It's one of the stocks we like to follow, we like to trade. Um, this would be a local high where my cursor is here. Um, the bars to the left are all lower, and the high of this bar is 274.11, and then the ones to the right are lower as well. So we mark that as a level, a inflection point, and we're going to look for a swing trade if we reach that level again. So moving forward, you can see somewhere here, end of November, December, our level was 274.11. So in here, it looks like this bar is the highest. It goes to 275.70. So at the time of this trade, the ATR was about 6, and then when we put in this level that we recorded, it was about 6.2. So 1.5 ATR is 9 points. So depending on your account size and your risk tolerance and that kind of thing, you're going to have to figure out how many shares you can buy and that kind of thing. But you want to give this about 9 points of room, and you would get triggered here. This would peak up above that level and immediately fall down. So it really didn't breach this much higher, and it was in the money. And likewise, you're trying to make 9 points as well. And this is a beautiful one. This is a really nice looking one because it happened within a day or two. It was in the money almost instantly, and it triggered again. Let's see what else we see on Intuit. If we go to the present, this looks like a local high that could be too. We've got this very nearby, and I'll give you some extra rules about this. But basically, as long as levels are about 10 bars apart or more, then you can use them separately. Obviously, the stocks come off a lot, then it puts in a high here, and then it comes off a ton. So this is a valid level to trade off of. Likewise, I would have traded off this too. This one looked like it would have worked out. But let's say we had this recorded. Um, this is 290.22, and it looks like we're getting very close to that level as of today. So there's a potential swing trade set up on into it at 290.22. The ATR for this would be about 18 points. This thing moves quite a bit. So you're looking to give it 18 points room and take 18 points out of it. Um, Again, these are pretty expensive stocks. Let me see if I can find a better example that's not such a crazy price range. So here's a stock. This is Raymond James Financial. And looking back, if we were back in last year, the stock trades around. Um, this would be a local high, and this is 87.17. And then within a month or so, it breaches it right here, only by about $1, and then it comes off. The ATR here was about $2, so and this is about $1.60. So you're looking at $2 to $3 of risk for $2 to $3 of reward. Again, the key about these trades is you want to identify the points where they come off almost immediately. That's why I put those conditions on the candles. 5 candles that hasn't moved in your favor at all, get out. 7 candles max. The reason being is there's no reason to have your money tied up in a trade when you can just move on to another one that's going to pay you. So that's the idea. Again, if you look farther left, there's this weird giant candle here. I don't know what that is, if that's earnings or not. I do have some rules about not trading through earnings, but depending on what that is, that would have been the same level. You could have traded it again. One of the rules I have about levels, I'll show you some of these conditions I have around swing trades and day trades. So for swing trades, you don't want to enter any of these swing trades and trade them through an earnings event for the company. You don't want to be in the trade and holding it when earnings are going to release before or after the market. So don't do that. Close out. Again, likewise, don't be when there's a major Federal Reserve decision or announcement. Don't hold a trade through that either. And you can find these out in advance. The calendar on Forex Factory is really good, and it has major kind of market events worldwide. So sometimes you see things that are happening in London or Canada or wherever, Tokyo. Um, the other thing is you can trade second touches. And what I mean by that is you have a level, a recorded level, you take the trade, it works out, you can take it again if it hits that same level again. I don't trade third touches. It doesn't matter how long, how much time's happened since that. The edge starts to fade away when things approach that level for the third time. There's more breakouts, it travels higher, and that kind of thing. So you can take a second touch, but you don't want it. There has to be at least 5 bars since your last winning exit. And when I say winning exit is you only take second touches when you get a winning trade that is pretty much your target. So it's got to be the maximum ATR winning trade. You took it, it pulled back, you got the full risk, and at least 5 bars has passed. So there's a little bit of space. You don't want something to bounce up and come right back down and then bounce right back up again within 1 or 2 bars. They're probably going to punch through. So you can trade second touches of the same level, and this goes for day trades as well on the short time frames. I do second touches as long as the first trade was pretty much a full winner, the full risk. If it was something that I had to scalp out because of the time stops or something like that, then I generally won't take the second touch. But if it was very good, I got the full amount, then trade the second touch as well. They have edge. So one of the reasons I kind of dug into this is a lot of the mania on the web and YouTube is all about the first hour of trading. They say, oh, it's the best time to trade. The first hour is the best, etc., etc. It's a lot of breakout trades, gap and goes, and that kind of thing. But what about the rest of the day? And that's why I said there's more than one way to day trade. And I know all the clickbait on YouTube is, oh, I made $600 in 5 minutes, or I made $1,000 in 4 minutes, and all that kind of thing. This is a little bit different, but it allows you to get a lot more winning trades. They're a lot less risky than the open. Um, when the market's ranging and tired or stocks are resting, you just get a lot of opportunity to kind of sneak in and sneak out, whether you're swing trading or intraday trading. There's some value here. I'm not saying you have to trade one way or the other. I'm saying add this to your toolbox so that you trade the open the way you want to trade it. If you want to take that first hour and get aggressive, trade the breakouts and the runners and that kind of thing. But then as you get into 10:30, 11 and you get the middle of the day, go ahead and start doing counter trend trading and start fading these moves and that kind of thing. So I'm going to talk a little bit about the intraday trade restrictions. And this is what I look for. And I have a lot more experience in this and I have a lot more back testing on this than the swing trades, but I wanted to give something out there for everyone so they can start to build off this framework. So trading counter trend on intraday, I'm going to show you 1 minute charts. What you want to avoid doing is you don't trade the first 30 minutes of the day, 9:30 to 10 Eastern Standard Time if you're on the East Coast with me in the US. Um, the reason being, price is crazy, right? There's a lot of price discovery. There's a lot of just like we were talking about. It's the opposite of the conditions that are good for counter trend trading. You don't know where price is going to stop. There's a lot of sweeping of levels and trying to figure out where the orders are and all that kind of thing. And it's really, really, really wild. So you don't want to buck those. You don't want to be against those with the tight stop because you're just going to get wrecked. So no 9:30 to 10. Likewise, the 3 p.m. to 4 p.m. hour, at least on the East Coast, isn't very good either. And what generally happens is stocks tend to trend in that last hour one way or the other, or they make violent moves. So you're not going to trade this. If you're going to trade it on an intraday basis, you're going to scalp with this. Don't trade 3 to 4 either. I am doing some back testing about lunchtime from 12 to 1, and it's kind of up in the air. I think on the slower days and the days where the market isn't really trending, they're good. I'll let you know. I think they're okay to trade, but they lean a little bit more to flat. The percentages get down to 55, 56% instead of the 66% winners and that kind of thing. It starts to flatten out a little bit. I'll talk a little bit more about that too. As an intraday scalper, what I like to set myself up for going into midday, but let me come back to that. Second touch, I mentioned this before. Again, same thing. There should be at least 5 bars since your last winning exit. So you can do these too, and these can happen really frequently. You get a level, price will work for you, you catch a winner, and then it'll go right back to it. Go ahead and do it again for a second touch, as long as your first trade was pretty much a full winner. If your first trade was some kind of scalper, you had to get out earlier, it didn't really go your way, don't take the second touch. Okay, let's take a look at Microsoft. This is actually today. And if you're in the market today, basically gap lower, and the S&Ps filled the gap and traded higher, and then they came off near the end of the day. Um, but let's say we go in blind. This is the open right over here. We don't trade the first half hour, and Microsoft was basically gap down and traded up. Here's the 10 o'clock hour. So we don't take any of the levels that were created between 9:30 and 10. So this local high here, we don't trade that because that happened in this crazy half hour of price discovery and that kind of thing. But levels that are created afterwards are legit. So I'm going to zoom in just a little bit. Let's see what we can figure out. So it's after 10, and I can see a level here already. Technically, this is a local high. 1, 2, 3, 4. These 4 are lower. These 4 to the left of it are lower. So whatever the high is on this candle, and it happens to be 185.33. The ATR looking at the bottom right now is about 20 cents. So 1.5 ATR, so about 30 cents. You give this about 30 cents room for 30 cents profit. And what's going to happen is this is going to get triggered on this bar here. And we're probably going to get stopped out, but let's take a look. Let's do the math. This is 185.33. So we would put in a short sell, 185.33 with a 30-cent stop. So 63 would stop us out. And this one actually only goes to 185.44. So this would be a good trigger. We get triggered at 33, we get short. It goes against us about 11 cents, and then here's the turn. And you definitely get your 30 cents out of this, I believe. Here's so we're short at 33. The second candle, the low is 97. So within 2 candles, this triggered, and you'd have your profit. So we'd keep this as a good level. Technically, once we're out of the trade, I tend to take the newly formed high. So this is actually a new level. There's nothing wrong with this level, but this is now higher. So it proves that the resistance is actually a little bit higher up. So there's one winning trade. Go down here. This would actually be a local low. This is where it gets, there's quite a few trades during the day. So here's a local low. You got four over here. You got four up here. So we would take this trade the next time it hits here, and that looks a little scary. We can see it's happening over here. We're probably going to get stopped out, but let's take a look. We're not going to take these peaks up because this is the new high. We're going to use that. So the low here is 184.89, and we're going to use this ATR for intraday stocks. Like intraday trading, I don't recompute it on the hour. Generally, I come up with a fixed figure, and it's somewhere around a quarter of a point. So 30 cents for Microsoft seems fair. Facebook, I use about a quarter of a point. I use about 24 cents actually, and it's fixed. And I'll readjust it over time if things get wild. If there's a day when the ATR, there have been a few wild market days where the ATR is really crazy, even after 10 o'clock because the market's spooked. In that case, what I do is I'll adjust for the higher ATR, but I'll cut my position size in half or something like that. But let's use 30 cents and let's go over here to this bar where this would trigger. So the low here was 184.89, and it would get triggered in this bar. This is 184.76, so we're long at 89 most likely. So 76, 74, so we're not stopped out. Here's the third bar. It's kind of in the same spot, a low, a high. It doesn't really hit our profit target either. This is a little bit higher. This looks good. Here we're still not stopped out. We're at 184.70, and we were long at 89. So we're out about 19 cents at this point. So I don't know if you remember my previous slides, but we didn't get much favorable excursion on this at all. So we would look to get out on the fifth bar, and that's exactly what's going to happen here. So we're triggered on this bar. 1, 2, 3, 4, 5. This is the bar where we would look to get out on the fifth bar or before. We really didn't get it to go in our favor much at all. A couple of these it peaked up about 8 cents, but just get out. It happened to go higher after that, but you're doing the right thing. So we had a full winner on this one. Let's say we get in the middle, get out in the middle of this bar. It doesn't necessarily have to be the low. So it'd be 76. You lost about 13 cents. You made 30 cents. You lost 13 cents. All right. So we had a local high over here. Now we have this, and this looks good. I can tell just by inspection. So 185.44. This peaks through it. It goes to 48, and within 3 bars, it looks like you're going to get the full win. 185.13. There's almost 30 cents in that, in the first 4 candles. So now you've got 2 wins and a partial loss. Then things slow down a little bit. You start getting these lower local lows. I'm a little wary of these. I don't automatically adjust when they're so close. Again, I like to give them about at least 10 bars of space. Maybe here I would decide, okay, things have settled down, but this is really the high. We've seen it hit there twice. So for me, I don't think I would be looking at these levels. Again, it's up to you. There's a discretionary element that you can put in here, but this really, since this worked out twice for me, I'm really looking at these kind of levels. I think this thing can be much higher than here. Here's local lows. So here's the first one, and this is 184.98. And it gets triggered over here, 184.95. So you get triggered, and it's in the money, and you're going to get your 30 cents within 4 bars. So it's these kind of things. I know it looks simple by inspection, but the rule is 4 higher bars on the left and the right. Take that, trade off it. So these I would take more than the shorts, right? We have these highs up here. Here's the resistance. But this looks decent considering how strong this is. I take that, take that. I don't think you get triggered here. And I would take the second touch too. Remember how I said, oh, if the first touch was fully profitable, I would take the second touch, and that's going to happen over here. I don't know how this plays out by inspection, but let's take a look. So 185.48, This goes to 185.49, and then it sort of flattens out. You probably don't get a full winner here. Looks like the low here is 34, but within 1, 2, 3, 4, 5, you get some crazy moves in here. My hard stop was 7 bars, if you remember on the first slide, so you'd be out somewhere in here with a slight profit. But that was the second touch, so I wouldn't take that level again, and especially this one didn't work out very well. So this forms a more traditional resistance area, and this is up to you. When I see this happen and it's in the middle of the day, aside from counter trending and using this system the way I've explained it, I will take discretionary trades. I'll scalp in here. I won't try to hold them for the full move, but it will if I'm really seeing it on the tape and on the level two, then I'll just bounce in and out here a couple times. But that's outside of this counter trend system. Again, this is just one piece of the puzzle. This isn't, hey, trade this way for your whole day. This is add this to your repertoire so you get an extra 1 hour or 2 hour or 3 hour a day like I do. That's what I found is really successful. So Microsoft at lunchtime. We talked about lunchtime. This looks like a local low. It doesn't really look like it's triggered anywhere. And then later in the day we break out. So let's take a look at one of these. You're definitely going to feel the pain of breakouts every once in a while. It doesn't happen that often, but considering this is a local high, it's a little bit above these other highs, eventually you're going to end up taking this trade because it triggers over here. And that's why you put in that hard stop to protect you. The most you're going to lose is that 30 cents or whatever you decided on for the ATR, and that's it. You go about your business. So what do you do when a stock trends like this and just goes straight up? You don't do anything. You took this level. There is no other resistance level above here that you know of for the day, right? There's nothing else formed. This is the highest thing. It's higher than these ones over here just by a little bit, and that's it. So you don't do anything with this, unfortunately, in a counter trending system. Um, if you can change gears and suddenly become a trend follower because you think this is going to break out, then great, do that. But counter trend, we're not going to try to short this anywhere here because there isn't anything. It never kind of pulls back until here. So this would be the first level where you would be able to consider a counter trend if it gets here again. So let's take a look at that. This is 187.13, and it doesn't get triggered until way over here. Let's see what it looks like. So 187.13, it gets triggered on this bar, I believe, which is a high of 187.25. We got a 30-cent stop loss. We came up with that earlier today. So you're okay there. And so we're going to be short at 25. We're not going to be short at the top of this candle because that's when it triggered. So 1, 2, 3, 4. Let's look at the first 4. So the low of this bar is 187 flat. And we were short at 187.13. And then it just kind of bounces around and bounces around. So you probably would have flatted this trade, or maybe if you were lucky, you'd get out with a little bit of profit. This is the 7th bar. Again, I said 7 bars, and then you're out. It doesn't go your way, you get out. We did get a little favorable excursion, so you may not get out right on the 5th bar. I don't know. It's up to you. But you get out with a small profit. So again, I think we're still up for the day, at least 2R. And we'll go about it again. If we were paying attention over here, this is a local low too. Um, and this looks like it got triggered over here, and this looks decent. This may have been a second touch at this local low. So this would be decent. This would be, and then here's 3 o'clock. After this, I don't trade. In here, it looks like it's still continued to range quite a bit after 3 o'clock, but generally there's just some spooky moves in here, and I don't trade. So that would have been a win if you were just trading Microsoft. You'd be up 1 or 2 hour. I'd have to do the math on it. But that's what the intraday looks like. Let's go to Facebook. This is one of my favorite stocks. So I'll show you the open. So on the far side here, here's the open. Here's 10 o'clock. So 10 o'clock, it has this crazy run bar, and there's really no level of trade until here. And this was a high of 212.87. And it gets triggered over here. I used about a quarter on this. I'm sorry, this level was 213.08. It gets triggered over here. I use a quarter, so I'd be good till 213.32, and this goes to 13.218. and then you can see it heads lower within 4 bars or so, and on the low of that red bar is 212.80. So that would have been a quarter point. All right, I've gone through quite a few examples, but I want to just kind of revisit the rules with you just for clarity to go over them one more time. So you got local highs or local lows, um, and they're those peaks, those V shapes with 4 candlesticks, higher or lower on each side, left and right. You've got a hard stop loss of 1.5 ATR, and that swing or intraday. Intraday, I don't adjust it, I come up with a value. It's usually a quarter, 30 cents, unless you're trading like Tesla or something crazy, then I'll let you adjust it. I use a time stop. Again, we're looking for the point where price is turning, and if it's not turning, we're gonna get out. So if you've never got favorable excursion into your price, 5 bars max, get out. And then no matter what, if it starts meandering around, maybe you're in profit and that kind of thing, and you're holding, 7 bars, just get out. So on the 1 minute time frame, 7 minutes, you shouldn't hold a trade longer than that, pretty much ever. Otherwise, you're not really counter trending. You're starting to get into a longer kind of hold kind of thing. Swing trades, don't hold through earnings, don't hold through Fed announcements. You can use second touches, make sure they're spaced apart a little bit, as long as the last one was a winning trade and pretty much a full winner. You caught pretty much the whole target. The intraday trading restrictions. Don't trade in the first 30 minutes. Don't trade any levels that form in the first 30 minutes. Don't trade the last hour of the day. You can do the same thing. You can do second touches as long as they're 5 bars apart, 5 bars apart, and the last trade was pretty much a full winning trade. And that's really it. That's a good start for you. I can tell you that the intraday trades, um, like I mentioned, they get upwards of 66%, 70%, and that kind of thing. Depending on how you feel about lunchtime, like I said, I'm still doing some back testing. You can just trade the system and be up 1, 2, or 3R a lot of days out of the month and have very few losing days. So one thing I do is I do set a loss limit of 3R. So whatever your risk is, your ATR on these trades, if I'm down a full 3R, meaning I had to take full stop losses on 3 trades, and I'm negative P&L that much or more, then I just stop for the day. It's happened one time in the past 22 days or so, but in that same time I had I think I had 4 days where I was at 3R or more. So I had one losing day that I was down like 300. I was using quarter points on 400 shares, and I had 4 days where I was up at least 300 in that month. So it's a rare occasion. The high win percentage really helps pad things, and it keeps you really comfortable during the day. You win, you lose, you win, you lose. You don't always get fully stopped out. So because you get to use the time stops and manage these trades, some of the losses are smaller, some of the wins are smaller too. Um, but you have this opportunity to kind of stack up wins on top of each other and make a decision. Maybe it's midday, maybe the market starts to get strong, maybe it starts to trend, and this system isn't, you know, worth trading for the rest of the day because we broke into a strong uptrend, or the SPYs broke out or something like that. Then you can go ahead and let it go. It still gave you 1 hour or 2 hour for the day, and use whatever else you have in your toolbox. So that's pretty much it. I just want to give you the idea of how to find those local levels. It's not complicated. It does have edge. The swing trades are a little bit funky. We could look at a couple more of those if you like. But if you look at the daily on the swing trades, Beyond looks like you've got this level that was created over here. There's a couple touches, and we're right back in the same spot. I made some notes. Dell might be a swing short. So you can see local high here. Local high is the first touch of it. This looks like it works out. And here's the second touch. We just hit it yesterday. Maybe it hits today and that kind of thing. So there's this kind of area of these areas of pivots or resistance. Yeah, Microsoft. A lot of the tech stocks have this chart going on right now. So you're going to get sucked into a lot of pivots because we're right back up to where we were here. So Microsoft here, the high was 190.70. And today, with today's close, we're at 186.74. So you're about 4 points away from triggering a possible pivot trade here. So the ATR on this would be, it would be where you're at now. So about 5 points, 1.5, so about $7, $8. So this might be a great pivot trade. 190.70, give it $8, so give it to 199 and try to catch $8 out of it. And you guys know the rules. If it doesn't come in your direction, come in your favor within 5 bars, go ahead and get out. Give it 7 bars total. But you can see what happened here, and some of these can happen in the same day. You got to remember this bar traded up and traded down the same day, so you get a lot of this maximum, this favorable excursion. That's it. I hope that was helpful. It's really not that complex. The ATR rules are mine. The time stops are mine. The back testing has really been done on the shorter time frames. I just wanted to show you how to find these local highs and lows in a systematic way. Give you a kind of sensible range for where to put your stops and how to trade them. Trade them even money, one risk, one reward. You're going to win more often than not. It's a lot different than breakout trading and trend trading and that kind of thing. But again, you don't only have to trade this way. You can do this, trade the open, do what you can there. Then as you slip into midday, go ahead and put on a counter trend strategy and start looking for these trades, because you're going to get a lot of these, especially as the market starts to get back in this range that we are right now. Here's the overall, here's the SPYs. So you can see we're kind of in this weird flat area, and I just feel like this is going to be a lot more successful, swing or intraday. Um, some of the tech stocks, they're getting a little toppy. They've come all the way back up to where they were a couple months ago, and now they're just sitting. So I think this is something that can really help add some dollars to your accounts. So if you have any questions or comments below, if you've done something like this before, or if you have more to share about the swing trading aspect, I'm all ears. I'd love to get some of this automated as well. I think this is pretty easy to automate. The rules are clear. There's some little conditions and stuff to handle, but I think this could be an automated strategy that could run against a lot of different stocks. So please, if this was helpful, if you thought it was insightful, or if you think I'm crazy and this doesn't work at all, go ahead and put something in the comments below. And if you would subscribe, help me out, support the channel, and I will make videos, more videos like this about the things I'm finding and the things I'm trading. But I am trading this counter trend strategy intraday every day, full time right now, and it's treated me really well. Um, I just got to figure out how to kind of scale. Automation would be good because I can only watch so many stocks, especially as these levels form in real time. It's a lot to kind of keep an eye on. But thank you. I hope this helped, and I'll see you next time.